Derivatives are financial contract whose value is dependent on an underlying asset or group of assets. The commonly used assets are stocks, bonds, currencies, commodities, and market indices. The value of the underlying asset keeps changing according to market conditions. The basic principle behind entering into derivative contracts is to earn profits by speculating on the value of the underlying asset in future. Let us understand this with a better example. Let's say a farmer who produces wheat expects to sell 10 quintals of wheat after 4 months at Rs 2,000 per quintal. But he is afraid of some damage due to untimely rain predictions. To avoid the risk, he approaches a commodities broker and enters into a contract to sell 10 quintal of wheat production after 4 months at 2,000. Therefore, tomorrow, if the prices fall to Rs 1,970 due to large supply in the market, the broker will be bound to pay Rs 2,000 to the farmer. But after 4 months, if the market price of the wheat rises to Rs 2,020, the farmer ends up losing Rs 20 per quintal as he is bound to sell at Rs 2,000 to the broker. This transaction very simply explains how a derivative contract works. It is an example of a forward contract where the underlying asset is a commodity. Different types of derivative contracts. The 4 major types of derivative contracts are forwards, futures, options, and swaps. Let us take you through each of these types in detail. Forwards and futures. These financial contracts obligate the buyer to purchase an asset at a pre-agreed price on a specified future date. Both forward and futures are essentially the same in nature. The major difference is that futures are traded on exchanges, while forwards are customized contracts and they are not traded anywhere. Options. Options provide the buyer of the contracts the right but not the obligation to purchase or sell the underlying asset at a predetermined price. There are 2 kinds of options: call and put. In a call option, you have the right but not the obligation to buy a given quantity of underlying asset at a given price. In a put option, you have a right but not the obligation to sell a given quantity of the underlying commodity or asset at a given price. To buy any kind of options, you have to pay a premium. Swaps. Swaps are derivative contracts that allow the exchange of cash flows between 2 parties. The most popular types of swaps are interest rate swaps, commodity swaps, and currency swaps. There is a term which is vital here to be known, that is mark to market. Mark to market involves recording the price or value of a security to reflect the current market value rather than the book value. It is also known as M to M and is mostly done in future contracts. Now, what are the benefits of derivative trading? First of all, hedging risk exposure. Since the value of the derivatives is linked to the value of the underlying asset, the contracts are primarily used for hedging risk. Hedging risk means reducing risk in one's investment by making an other investment. The investor takes opposite position in 2 investments to offset the risk of any adverse price movement. Number 2. Underlying asset price determination. Spot derivatives are frequently used to determine the price of the underlying asset. For example, the spot prices of the futures can serve as an approximation of the commodity price. Number 3. Higher returns. Derivative trading gives you more possibilities of higher returns. But what are the risks that you should be aware of? Number 1. High volatility. High volatility of derivative exposes them to potentially huge losses. Number 2. speculative features. Derivatives are widely regarded as a tool of speculation. Due to the extremely risky nature of derivatives and their unpredictable behavior, unreasonable speculation may lead to huge losses. To conclude, derivatives trading can be extremely beneficial, but we suggest that you enter only after you have had 5 to 6 years of experience in the stock markets. When done with enough experience and knowledge, derivatives trading can certainly reap great benefits. If you liked our video, give it a thumbs up and subscribe to our channel. For more insights, visit our website www.edelweiss.com.